That's always a potential for more volatility, particularly in this environment where we see tariffs that can come on one day with one tweet. We could get another round of tweets that can send the market in more volatility. So in our mind, it's very important just to maintain flexibility, look for those opportunities. It's not that you've entirely missed the boat here, but there certainly could be more opportunity ahead.
Weiss, you bought Disney. What else you making a move on?
Well, I took the opportunity Joe talked about, as we know, to add to Apple. I added to Boeing too early, but now it looks like it's fine, making money in it. Target, that got killed. I bought some added to Target. I had sold some UAL about a quarter of the position. I bought it back actually this morning. So I think you do have to be flexible. You have to maintain your price targets, which I was on UAL, and come back in, when the market gives that opportunity. And you will get more opportunities without a doubt.
What's your gut tell you about where we are in the market after that rebound we got yesterday? Some would say that was that moment where you're down heavily, right, and then you reversed it all the way back, and now you've got a Dow that's up nearly 300, as I said. Yeah,
and we saw it coming. We talked about it after the show and said, hey, the market can close in the green today, and guess what it did? So, look, my gut tells me is that, like Joe, I have no clue. We can get a tweet, 10 minutes from now while you're interviewing Icon, and the market can trade down 1%. So, look, to me, it just goes back to finding quality names, taking opportunities when they miss. A quarter's not going to define Disney going forward. A quarter doesn't define Skyworks going forward. I added Skyworks this morning. I'll add some more. Disney's not a full position. So my gut tells me I think things are okay, but you've got so many things going on, so many fronts globally that you can't get complacent.
Remember, just a few days ago, we were suggesting whether, things had changed. That's the word that we were using. You thought they had.
I still do.
Others that I talked to agree with you that things had changed from that last tweet about these additional tariffs coming on September 1st.
Unquestionably, things have changed.
Even with where we are now, with the way that the market has reacted in the last couple of days.
Yeah, I look at the fact pattern behind it, and I'm saying, look, the fact pattern behind it's worsened, right? Economies have worsened. And there seems to be, I wouldn't say panic globally, but you have central banks, not ones that really mean a lot, like Thailand. Who cares? They can cut 500 bips. I don't really care. But things have changed. That's why I'm saying you can't be complacent.
Okay, Doc, what are you doing? I haven't seen you in a while.
Good to see you, Scott. Yeah, there were a lot of folks that were nervous going into that Fed meeting. We talked, and I wrote an article for CNBC.com about 50 Cent, that trader that comes in and buys these 50 Cent out-of-the-money call options on the VIX, and that person made, I believe, 500 or 600% on that particular trade. Yeah, nothing to scoff at.
Yeah.
Even
it's almost
Scott.
Up there to Weiss. Yeah,
but
weekend tips.
When you look at what's going on there, I think a lot of people were nervous, Scott, because they were nervous because they wanted to see, the market wanted multiple cuts. They wanted to be the beginning of a cycle. And the way Chairman Powell came out and expressed it, it was far more like that it was, hey, this is a one and wait. Not one and done, maybe, but one and wait. And then the president came out with those additional tariffs, Scott. So when the markets started to assess the possibility, a greater possibility of a recession, keep in mind it's still a minority. In other words, we've gone up from 30 perhaps in the last 30% chance in the last 10 days to now 35%.
Chorus is growing, though. I mean,
right.
you take a look at this is a big deal, okay?
Yeah, it is. It is.